Hey, what's up guys? John here. In July of 2021, right when this video came out with Klaus Schwab talking about the cyber pandemic, saying that this is going to be, I'm going to share with you this video in a second, that this is going to be far worse than anything we've experienced over the last few years. And then what we look at right now with what's happened over the last couple weeks, it to me signals that we're stepping into exactly what they were discussing. Take a look at this video and look at the date here, July 5th, 2021. Well, here's the video.
Attention to the frightening scenario of a comprehensive cyber attack, which would bring to a complete halt to the power supply, transportation, hospital services, our society as a whole. The COVID-19 crisis would be seen in this respect as a small disturbance in comparison to a major cyber attack.
So, if that didn't get your attention, look at this. The title of this Newsweek, it's a cyber pandemic. This just came out yesterday. How attackers outwit all efforts to stop them. It's a cyber pandemic. Talking about last week, if you don't remember, the FAA grounded all planes. All planes. This is the first time it's happened in 20 years, over 20 years. And so we look at what's happening right now. Bank of America CEO, if you've heard of what happened at Bank of America yesterday with this Zelle situation in which users were seeing money pulled out of their accounts. It's all over TikTok. All of these different users, people were yelling and screaming at the banks. There's tons of people inside the lobby trying to get their money out of the banks. Pretty scary situation. Well, the Bank of America CEO, where was he? He was in Davos, Switzerland at the World Economic Forum meeting. And so during this meeting in Davos, he goes on to say that new ESG rules need to reboot capitalism. He says if you're below it, we shouldn't do business with you. So what they want to do is set a standard in which businesses need to operate in. And if you don't operate inside that standard, they don't want to do business with you, right? So it says, but with this standardization, cross-jurisdiction rules that are part of companies' annual reports and audited, he continued. Then frankly, an investment manager, a consumer, society, others can't sit in there and say, here's the line that is acceptable, and if you're either above it or below it. If you're below it, we shouldn't do business with you. And if you're above it, tell us how you're making progress along these important things, which at the end of the day will align capitalism with what society wants from it and gets us going faster. So they determine what is below and above that line, right? And so Bank of America CEO, now Bank of America says the problem with Zelle transactions resolved, right? So you look at what Bank of America recently just said. This is 2 days ago. So during this entire time, while they're in Davos, the CEO's in Davos, they go on to say Bank of America's CBDCs are the future of money and payments. Then the ESG policies, then the Zelle banking situation that's happening in Bank of America. Many people say, it's just Bank of America. It's not a big deal, John. You're being dramatic. We look at what's happening right now. Central bank digital currencies, how money could be redesigned, right? This just came out as well 2 days ago. So it's all right in front of us, right? All right in front of our faces. And we look at who their partners are. There's almost no escaping it, right? If you are in America. So even almost anywhere right now, you look at, for example, I'll go to the letter B. Letter B, you look at all the banks. Not all of them, but a lot of them that are titled Bank of America, Bank of China, Bank of Industry, right? Bank of Madeira, all over the world, right? Bangkok Bank, and it goes on. JP Morgan's in here. JP Morgan's the biggest Bank of America, JP Morgan Chase. So you start to look at a lot of these. Citibank is in here. All the big banks are in World Economic Forum, right? And so you simply add everything up together. You add it up together today. The debt limit threat looms. Wall Street, Washington have only rough plans. And so here they discuss, what they could potentially do with this is like the 75th time that they've had to, readjust or, mess with the debt limit. And they continue to do this and do this and do this. But this is not going to, I think, end well. I think ultimately what's going to happen is it's going to get pushed to the breaking point and they're going to come up with a new solution. With days to go before the United States bumps up against a technical limit of how much debt it can issue, Wall Street analysts and political prognosticators are warning that a perennial source of partisan brinkman could finally tip the outright catastrophe in 2023. Now, you look at what's happened or what's happening right now, this just came out as well 13 hours ago. Fed policymakers call for further rate hikes to beat inflation. So they can continue pushing up rates, pushing up the cost to borrow for consumers, pushing up the cost for consumers to service credit card debt, existing debt. This is going to just continue pushing people into asking for another solution. People aren't going to be able to make ends meet. You look at the cost of eggs, you look at the cost of just basic life now, it is so expensive. Big investors and in banks, economists are using financial models to predict when the United States, which borrows money to pay its existing bills, will run out of cash. They are assessing what it could mean if the U.S. government is unable to pay some of its bondholders and the country defaults on its debt. And they are gaming out how to both minimize risk and to make the most of opportunities of profit that might be hiding in the chaos. They need to start planning. Potential debt limit breach became more urgent last week when Treasury Secretary Janet Yellen told Congress that the United States would hit its borrowing cap on Thursday. At that point, Treasury will begin using extraordinary measures to try and stay under the cap for as long as possible, but those options could be exhausted as soon as June. Congress places a limit on the amount of debt the country can issue, with a simple majority of the House and Senate required to lift it. The cap, currently at $31.4 trillion, needs to be adjusted to allow the United States to borrow to pay obligations it has already committed to, such as funding for social safety net programs, interest on national debt and salaries for troops. Wrangling over lifting the borrowing cap has become a fixture, right? They go on to say here, Bank of America analyst wrote in a note to clients this week that a default in late summer or early fall is likely. While Goldman Sachs called for the possibility that the government would not be able to make good on its bills, a greater risk than any time since 2011 when the nation approached the brink. In that episode, its credit rating was downgraded and a wild market gyrations helped to force lawmakers to blink. So this is what I think everyone should be doing right now. If you are in consumer debt, you have credit card debt, you have some type of adjustable rate debt, I would do everything you could possibly do to either get that debt into fixed rate debt or to try to pay it off as quickly as possible. Because what I think is ultimately going to happen is if you have that ability, that flexibility, you can move and pivot, you're not straddled down with debt, you're going to have more options. And as banks start to get more and more scared, more cautious, they're going to start shrinking the amount of money they're going to want to lend. And during that period when maximum fear is in the market, that's when maximum opportunity is going to be coming. And that's why I personally believe this is an incredible time if you have bad credit to fix your credit. This is a great time to do balance transfers, to get out of this high interest adjustable rate debt and get it into, a better type of solution. Right now there's 3 credit cards that are offering 0% intro APR debt at 0% for 21 months. There's a lot of different credit cards that are offering 12 months, 18 months, but at 0% interest. If you have high interest credit card debt, it might make sense to start looking at ways in which you can better position yourself, because as the world starts getting crazier and crazier, I think we're just going to start to see banks really just put up the walls. They're not going to allow money to flow as easily, and I think there's just going to be much, much more fear all throughout the markets, right? I think we're going to see a lot of attention actually flow towards, if I had to bet, gold. Gold, I think, is going to be one of those investments that a lot of big banks, central banks are already seeing it. They're already investing heavily in gold. But I think we're going to start to see a lot of hedge funds, private equity funds. I think we're going to see a lot of family offices. We're going to see a lot of people not chase these massive yields, but really just chase stability. I think we're going to start to see people looking for a hedge against the risk and the chaos that's unfolding in the world today. And that could be a good thing for gold. What do you think about this entire situation? What do you think about this statement? I mean, they're at Davos. They were just there the other day, or still maybe there today, at this meeting discussing what the future is going to look like. You go to their website. You look at the players that are here. It's every big company. Like, it is every big company. A year and a half ago, people would say, oh, that's tinfoil hat, that's not real. But it's like you look at it, you go into your house, you look at every major brand, they're probably on this website, right? They're probably on this website as a donor, as a sponsor, as a partner, a strategic partner. They're a part of it, right? Every major player, every billionaire, they're all here. So what do you think about it? Drop below. Hit the like button. Subscribe here. Subscribe also to my second channel. It's an interactive call-in show to podcast. LinkedIn, Twitter, Instagram, and TikTok up in the banner. And I'll catch you guys in the next video. If you need help fixing your credit, again, it's greatcreditfast.com. That's greatcreditfast.com. You can call us at 561-430-5900. That's 561 430-5900. I'll catch you guys in the next video.